Hi, everyone, and welcome to this third webinar with STL Partners, looking at the impact of COVID on the telecom sector. So the first one, we were sort of, figuring out the lay of the land, what's happening. The second one, we sort of looked at how telcos were shifting their priorities. They're expected to shift their investment priorities and activities with regard to COVID. And now, as you can see, the third one, what we're talking about is figuring out the future of the telecoms. So what's the longer term outlook? So just a couple of housekeeping bits before we get going. During the webinar, you guys, as the audience, are all in listen only mode, but if you have any issues, please do put them in the chat box and I'll be watching out for them and can hopefully address them. Likewise, if you have any questions throughout the webinars, please use the questions box and we'll get to them over the course of the session. This is being recorded and we will share the recording as well as the slides from the presentation with everyone afterwards. And if you have a great desire to put anything on social media, then you can see our hashtags there below. Now, moving on, let's introduce everybody who's here with us today. So I'm Amy Cameron. I am a senior analyst at STL Partners, and I am your moderator for the day. So I'll be making sure our session runs time, getting your questions to the panelists, and all of that. Next, we are joined by Dr. Rainer Deutschmann, who's the Group Chief Operating Officer for Dialog Axiata in Sri Lanka. So Rainer, do you want to introduce yourself quickly, please?
Yes, thank you so much for having me again. It's always a very much pleasure to talk in this round. Yes, I'm running the Sri Lankan business of Axiata Group. We have a fairly integrated play, mobile, fixed wireless, fiber, TV, pay TV, financial services, enterprise services, wholesale services. So we are a fairly rounded telco, and I'm very happy to be again, like I said, here, share some of the experience and have a good exchange with you.
Great, thank you so much for joining us. Next up, we have Andrew Collinson, who's Research Director at STL Partners. Hi, Andrew.
Hi.
Well, we'll hear more from Andrew in a minute. He's going to be doing the first bit, looking at what's happening now in the telecom sector and where we are. Next up, we have Dean Bubley, who's an Associate Director with STL Partners. He runs our Network Futures stream, as well as with his own outfit, Disruptive Analysis. Dean, do you want to introduce yourself quickly?
Hi there. Thanks, Amy. Thanks for bringing me back on this. So yeah, I'm a telecoms industry analyst and also a futurist as well. So I'll be looking at some of the more sort of long-term scenarios from the pandemic and what that means for telecoms. I'm also Disruptive Dean on Twitter, if you want to see my commentary there. Cheers.
Great, thank you, Dean. And finally, we have Matt Jones, who is also a senior analyst at STL Partners, and going to bring in the tail end of the session. Matt, do you want to introduce yourself?
Thanks, Amy. Great to be here. As Amy said, I'm a senior analyst at STL Partners, and I'm also leading our research into quantifying and sizing the impact of COVID-19 on the digital health market. And that's something we're going to discuss in a bit more detail later in this session. So great to be here, and back to you, Amy.
Great. Well, thank you very much, everyone, for joining us. Really looking forward to the discussion that we're going to have today. So, as I mentioned before, a bit of context about what we've done before. We published a report that was called COVID Now, Next and After in March 2020. And our first webinar was sharing some of the insights from that report. On the 5th of May, we did a second one, which is about telco priorities. And we also published the research associated with that from that survey, which was completed by over 200 industry respondents. And as Matt said, we're now conducting some follow-up research looking at the particular opportunities in adjacent markets, notably healthcare. And that brings us to our agenda for the day. So the way we're going to run the session is actually we're going to do discussion throughout. So please do send your questions as you think of them. We're going to start off, as I said, with the current environment and kind of where telcos are now. Then, and that's going to be led by Andrew. And then we're going to look at some of the longer term scenarios, and that's going to be led by Dean. And then finally, we're going to have a look at the healthcare sector, and that's going to be led by Matt. And throughout, we will have some wonderful on the ground insights from Reiner. So please, as I said, send your questions throughout because I'll be putting them to the panel as and when they're relevant. So with that, I hand over to you, Andrew.
Thank you, Amy. So I'm going to cover very quickly some ground we've covered before, but just to set the scene. So back in March, when we wrote our first report, we came up with the then spectacular view that it's a long-term disruption. I think everyone's pretty much understands that now. And we've also looked a lot at what telcos have done, and telcos have certainly behaved well during the pandemic. They've done great things for their customers, and I think their reputation has improved in many sectors. We observed at the time that the pandemic would accelerate long-term trends. So trends we think are important, we call the coordination age trends, and these are about the ways in which consumer behavior and business behavior and technologies are being used and will be used to create new propositions and develop new value. So primarily about making better use of resources. But however, 5G spending, certainly near-term 5G spending, may be more cautious, was our view back in March. And we can talk a little bit more about, I'll talk about a little bit more of that in a minute. We think the biggest opportunity, and this is again what we thought at the beginning, we still think that telco, it's a great opportunity for telcos to think about customer needs, enhancing their focus on customer needs. It's a great opportunity for reconsideration, and also an opportunity in many ways to accelerate and embody change. One of the problems with the industry has been getting change moving fast enough, and clearly we've all learned that you can change an awful lot quickly during COVID, and one of the big opportunities, and we'll come back to this, is making things happen and keeping them happening at the speed they have been. In the survey that Amy mentioned, I'm just going to give a very quick high-level view of the findings. So first up are the obvious things. When I say obvious, this is what respondents told us were the biggest opportunities. So automation, healthcare, security, conferencing, network resilience, transformation, and understanding needs. They came out in the survey. That's what the industry responded. So there was about 200 people, senior people, a mixture of operators, vendors, and some analysts too contributed to that. So these are the things that people thought were kind of not quite dead certs, but the ones that were very strong and must be acted on. Some more obvious than others in that list. The second list is the possible opportunity list. So for some operators more than others, these are big opportunities. So AI and analytics relates to automation. 4G, obviously, fiber and network upgrades, we've seen a lot of acceleration of that, a lot of fixed network activity, SD-WAN and network as a service, flexible stuff, innovation in theory, yes, and also these other sectors where they have big needs that need to be addressed. I've skipped consumer services because consumer is an interesting one because there's definitely a near-term opportunity in consumer because everybody's working from home. There's another trend that I'm going to talk about in a minute, which is about how enterprise and consumer have blurred their boundaries significantly. At some risk or slight risk, I think it's fair to say some telco cloud activities and some of the other kind of training development, recruitment, sustainability in the retail sector. Those aren't my perceptions, those are the perceptions of the people we surveyed. Interestingly, when it came to technology like cloud and indeed 5G, which is in the last column, so just show that as well. Thanks, Amy. The one that came out as the highest risk was discretionary 5G radio access network investments. And there's quite interesting stuff going on in technology, which is that, if you like, where a technology is near to delivery, it's getting accelerated. Where a technology is harder to deliver and harder to monetize, it may be being paused or slowed. That is what we've been hearing and seeing in the marketplace. And that means that some of the technology activities are more on the right-hand side and some of them are on the left. But often where they are relates to where a given operator is in terms of its ability to implement them. Although the ones on the left are being more strongly implemented almost wherever you are because they have to be. So that was the sort of spectrum of what people were saying to us. And I thought this is a very useful quote from a very senior guy in a US telco who said the consumer is now and will remain a priority for enterprises working from home, and other trends will not 100% recede to prior levels. And I think that, again, is fairly widespread a widespread belief now. And most people we're speaking to, the level of working from home is, significantly higher, both in telcos and in their customers, than it was previously, and it's not believed to be receding. And as the damage, as the interruption continues and the structural damage continues in the economy of things like retail, where those things are happening, then you're going to see those trends more and more entrenched. So I just want to conclude with a summary, and I'd like to get some discussion around this with the panel. I tried to summarize where I thought we were basically yesterday when I drew up this table. So strengths, telcos have done well in their overall response to the survey. They have been relatively lightly hit commercially. That's not to say they haven't been hit, because some have, and I don't know how much we can discuss that on this call, but there is certainly some evidence of that emerging, and they have improved the reputation. I'll just cover the weaknesses as well, and maybe we can just talk about this level, and then we'll come on to talk about the opportunities and threats. So the weakness is obviously the immediate economic impacts. So where you have a society where a number of people are either furloughed or out of work and businesses are closed down, you have immediate economic impacts. And there are further uncertainties on the future impacts, as I say, what remains of structural damage, how fast industries will recover, how fast people will go back to going out, doing things they used to do. There is unquestionably, certainly in the markets I've looked at, pent-up demand for doing that, and people are keen to do it, but there is also impedance to that, and so nobody knows yet how fast or how that's going to happen. And I think Dean and I were engaged in some online conversations earlier, and we kind of think it's going to be a wobbly road for the time being. It's not a V or a W, it's going to be up and down and up and down. And but I'm just going to pause there and ask for panelists' input on this situation, because we talked a little bit about this yesterday. Rainer, is there anything you'd like to comment on these?
Yeah, so clearly I think I support your assessment. We have seen, I think, a phase of I would say responsibility in the time when we had seen severe lockdowns in different countries. Certainly in our region, pretty much there was a very strict adherence to let people stay at home. In prepaid markets, like in our region, that led to the fact that people couldn't actually reload their phones because still not everyone is on digital payment. And in this time, the responsibility I'm referring to was basically to an extent that we would make sure that people stay connected as operators. Reloading the phone from our end and making sure that ample voice, SMS, and especially data is being given. So in terms of the impact, you could argue that would lead to a certain revenue loss. On the other side, if you look at our customers wouldn't have been able to use the phone in the first place, you couldn't really say it's a revenue loss in that sense. In contrary, what we see now as the lockdown gradually is relieved, the traffic surge that we have seen in the time of the lockdown, which was anything, I would say, between 30% on mobile and more like 40, 50% on the fixed and fixed wireless, actually retains. So we have seen basically, if I look at the business as usual, I would call before the severe lockdown an increase between what we see now as compared to before. So there seems to be a certain element of persistence of a higher usage, which basically is saying that the behavior of the customer has changed in a very short time. The second element, and I think you come to this, Andrew, is the absolute acceleration of digital adoption. When we look at the issue that I mentioned earlier in terms of using cash for reload, we have seen an amazing increase of now using digital reloads and using digital means for self-care and upgrades and so on, which is obviously very good for the customer as well as for the operators, as the cost to serve is now further reduced. And closing, I think in this part of the discussion, I would say that, and we can maybe come to this in a second, there is a number of innovations which we have seen coming from operators, which have not been visible that much, I think, before. If we look at not only lower cost data plans, but we look at specific support for work and study from home, where, for example, we have launched what we are doing right now, a specific video conferencing. So we have launched, and we have seen other people launch video conferencing plans, flat rates essentially, which give an increasingly attractive data, allowance. Or we have seen specific work and study plans which are dedicated to services other than, for example, social media, so that the employers can buy plans for their employees working from home, making sure that the work is supported and not the private use of the line. And so overall, I think the essence that we see is that there's a combination of higher usage, change of behavior, as well as a much lower cost to serve and the cost of the data. The last point I'm just giving as a note in terms of where we are now, we have seen the cost per GB, and that's just as an earmark, for everyone to consider, going down to a level of about 10 cents per GB. So that's the level of what we are seeing now in terms of offerings. And of course, if you go into flat rates, you can argue, but even in those plans which are still metered, you see anything between 30, 20, and even down to 10 cents per GB as an order of magnitude in terms of affordability for this region. Obviously, you can't compare this to other, North American, European, but that tells, I think, where the journey is going, and that tells that there is an affordability which will sustain in the time to come.
Now, I have a couple of questions from the audience that kind of touch on some of what you were saying, Rainer. So the first one, and you may have some experience from, within Dialog Axiata, as well as from what you're hearing from customers, but do you have any view, and maybe other panelists as well have a view, on what proportion of the population they think will continue to work remotely following, back to as normal as possible?
Yeah, clearly we have seen from our enterprise customers who have been asking for these specific plans to support their employees to work from home, the feedback that overall we see about 50% kind of a usage of the offices, and about 50% of the usage coming from the home. There's obviously very much variance if you have jobs which are requiring you to step out of the house in terms of like field force, in terms of our service and our support and so on, staff and other people that have to go. That is certainly that you can't count in. But if you are looking at office workers and knowledge workers, we see that on average about 50%. So there's a half-half kind of a situation. About 2 to 3 days, you would see people come to the office, and the other 2 to 3 days, you would see people working from home. And that's clearly supported by the traffic. So as I mentioned, the traffic patterns reflect this kind of a shift, which the original surge during the lockdown has come down to some extent, but it's clearly above the level of what we have seen before the lockdown period.
I think in terms of what I've been seeing, it clearly depends on which country you're in, what the makeup of the workforce is, and obviously the big split is sort of office workers versus, obviously if you work in retail or manufacturing, it's much harder to work from home, although there's some roles, for example, a production supervisor or something you could do from home, or maybe a broadcaster. You do interviews from home rather than a TV studio. But I think among the office population, and again, taking out things like self-employed and maybe software developers who are working at home anyway, of the people who used to work in office, you can probably think of almost like a third. A third will go back to working pretty much all day, every day of the week in the office. A third will go in a fewer number of days per week than they did before, and a third will probably try to completely work from home. And it's going to vary by sector, so you might find that the software and the tech industry is, looking at Silicon Valley, there's a lot more work from home. It's going to be contingent upon good broadband as well. But I think that type of makeup is what I'd expect to see, at least over the next, say, 12 months.
And a follow-up to that question is, in your perspective, what's the biggest challenge to overcome in order to enable people to continue working from home over the long term, or perhaps, Dean, allow some of the people in more difficult work from home jobs to work at home successfully?
Well, I mean, I think that there's two, if you like, telecoms parts of this, and one is I'm definitely seeing a lot of interest in what Rainer was talking about around work from home, high quality broadband, and there's multiple different approaches to that. You might find that some employers at the high end just give their employees a mobile hotspot or even a fixed wireless access router and say, you know what, ignore your home broadband. Here's our broadband. It's got set up for our VPN, our security. We'll give you a laptop or a tablet, and you just completely isolate yourself from the kids playing games or any security risks. Right down to there will be others that are perhaps looking more at the bundle sizes, as Rainer was saying. Maybe you'll see some convergence where you've got fixed and mobile combined in the same, either for backup or for you do a boost where you've got a fixed modem, but you have an LTE dongle attached to the back, so you can do your video conferencing, or, almost like the mythical turbo boost, but actually one that might work. So I think that's going to happen. The other thing that I'm definitely seeing is a lot of interest of in-home connectivity, better Wi-Fi. And I think the interesting thing is that Wi-Fi 6 has just got out into the wild before the pandemic, and I'm starting to see service providers offering Wi-Fi 6 capable home gateways and routers, as well as their existing sort of extenders and mesh products as well. And so I think that you already see a lot of people buying better Wi-Fi just through retail, but I think that that's going to be a big service provider push over the next 6, 12, 24 months, particularly on the fixed broadband side, but also I'm seeing fixed wireless access. So if I looking at a lot of the fixed wireless access providers, they are providing home gateways which have really high-end Wi-Fi inside the home. So 5G or 4G to the home, and then good quality Wi-Fi in the home, particularly if you want to try and get to gigabit or high levels of QoS.
Thanks, Dean.
Adding to, can I add, Amy, to Dean's? So if I look at what I think there's more attention now than ever on making sure that the different needs that the customer has at home actually are being served. Not everyone can afford a second router. Not everyone can afford a fiber. So what we see is that, for example, more creativity is being created to use even the existing router, adding a second SSID and a second APN, which is what we are doing, so that essentially I can reuse the CPE. However, I can actually create a second connection. One is being paid by the user privately, and one is being paid by the employer. So that's an innovation that we are driving. The second element is we see a very differentiated offering now between Cat 4, Cat 6, and Cat 12 in terms of the kind of the power of your connectivity on fixed wireless. I'm mainly talking fixed wireless because that's much more I think cost economic to get the coverage up quickly. And I'm running right now on a Cat 12 carrier aggregated about 100 Mbps downlink, 20-30 Mbps uplink. So it's a fairly nice connection where you don't really need a fiber necessarily to run. However, that would cost slightly more than $100 as compared to if you are looking at a Cat 4 router, which you get for about $23, $24 in this region. So there's a kind of a CPE offering that you would want to have in the market for your different needs. And the third element is the quality of service that we deliver from the network side, because obviously it makes a big difference if I am looking at a video conferencing traffic as compared to a streaming traffic as compared to a download and torrent traffic. So we see in our case, but I think across all my peers that I've been talking to, more attention being paid on the traffic management and the more efficient use of the capacity that we have in the RAN as well as in the transport and the core. So that is one of the preconditions to be able to deliver the traffic at the cost that I was mentioning, going below 50/40 to the level of 30 and 20 cents per GB.
Amy, if I can just pick up on the two bottom boxes quickly, so we can because we need to move on to that, the forward-looking stuff. Thanks, Amy. So I want to make 2 points. One is I think now is a great time for telcos to be thinking through again the needs of their stakeholders. By stakeholders, I mean government, regulators, but also employees, and customers, because people have changed in what they're thinking about. And we're certainly seeing signs from both governments and regulators that they're willing to entertain new conversations. So we've seen the regulator in Europe talking about cross-border consolidation. Oh, that's a good idea is another question, but I see that as a signal of a willingness to change. And Dean and I were talking yesterday about the increasing, at least intent, if not yet unlocking the budget to do infrastructure work in some government areas and so on. So I think there's a great opportunity of really being open with your stakeholders and trying to establish a different dialogue there. I think on the risk side, there are mental risks, if you like. There are two things. One is don't become too defensive. We've had a great conversation about telco stuff, classic connectivity. It's very important and it's right here and it's right now. But you need to be open to thinking about what else you could be doing and the new roles you can take. And you may need to make some hard decisions at some point. But the point is take them. The other thing is beware overstretch. Your budgets will be constrained because there will be some shortage of top line because businesses have gone out. People are going to be spending less. But that doesn't mean to say there aren't new opportunities there. So I think there's a very difficult balance to be struck between not being caught in a don't do anything position because it's all difficult, and going out and doing too much. And in between those, there's a very good place where you could grow some new interesting things. So with that, I really like to pass on to Dean to talk about the future scenarios.
Fantastic. Thanks, Andrew. Okay, so this is sort of going back to the report that we put out a couple of months ago. And in that, as well as the near-term analysis of what's going to be happening given what we know about the pandemic and the economy, I try to set up a set of scenarios, almost like looking back from 5 years' time as to sort of what might happen and what might the world look like. And these are not forecasts. These are very much thought experiments to allow service providers to think about the different ways in which the world could evolve and the telecoms industry within that. And so we'd identified sort of 4 possible future worlds. And the first one, what we call back to almost normal, which is sort of cautiously optimistic. It assumes that economies recover relatively swiftly, whether that's V-shaped or U-shaped, we can debate that. There's not an awful lot of change to the global order, if you like, as well, from a geopolitical point of view. Trade recovers gradually at first and then accelerates. And things like 5G, they might suffer a delay of a couple of quarters, but essentially the pattern looks the same, but just shifted out a bit. The second scenario was what I call fragmented recovery, and this was slightly more pessimistic, where some economies are considerably more damaged than others, take much longer to recover. Also, because of this, and also again the geopolitical fallout from that, we're expecting perhaps on that scenario, global initiatives to be somewhat less successful because of more friction in collaboration. Perhaps there's less travel between certain areas, less willingness to collaborate, and that tends to sort of feed through to sort of patchy development of certain things are fast in certain areas, 5G for example, but others there's a significant delta on national deployment and development, and say recovery in particular industries and IoT and transformation. The third negative scenario is the sort of the dystopian one, which is what we call weakened distance, and this is where there's much greater distrust between nations. There's much less economic and social collaboration, less scientific collaboration. Trade patterns are significantly hampered. There's much more onshoring of critical industries rather than international and global views of critical sectors. There's some significant delays from that in terms of telecom investment, and there's probably overall less global economic growth. And the positive one on the more utopian is what we call stronger than before, and this is where the pandemic, firstly epidemiologically, the recovery occurs either with good therapeutics or vaccines, But beyond that, governments sort of use this as a bit of an opportunity to do a reset. Behavioural changes get entrenched in a positive way. There's perhaps more cycling and less driving, perhaps less CO2 intensive production of, perhaps whether it's air travel or whether that's cleaner energy and so on. But essentially, it's a bit of an opportunity to renew industries and for beneficial behaviours from healthcare through to corporate social responsibility to take hold. And in terms of where we are, well, last time, this is the pattern of where I think things have gone in the last few months, and it's still somewhere between back to normal and fragmented. I think in a way what we're actually going to find that is that there may be the world looks like a hybrid of the fragmentation and stronger than before. And I think we're already seeing quite notable differences in the certainly recovery from what may be the first wave, or it may be the pandemic overall, between parts of Asia and more recently Europe versus the Americas in particular, which appear to be being hit hard at the moment. Now, whether that then continues or whether it's just a sort of a couple of month lag is hard to tell. But there's now a significant chance, in my view, of fragmentation in terms of economic recovery. There's a whole bunch of other factors here. We don't know about the virus, we don't know about vaccines, we don't know about the outcome of the US elections in November, various other midterm trends, which will then play out in various forms over the following years. What I do see is some early signs of the sort of the better before than before scenario. People are, and governments are, looking at, say, big investment in plans in infrastructure, connectivity. If you look at what's happening here in the UK or in the US, there's a bunch of sort of governmental plans to put lots of money into essentially connecting the unconnected, and also with that, there's certainly some parts of the world like to focus on industry transformation and action on climate change as well. Thanks, Amy. Okay, grab the next slide. So each of these sort of scenarios, and and I'm not going to go through. You'll be very happy to hear. I'm not going to go through each of these blobs one by one. In the report, which if you haven't downloaded it, I'd exhort you to do. We look at a number of different market areas, whether that's on fixed or mobile networks, consumer services, enterprise and verticals. What the regulation, how that improves, and all these we looked at through the lens of telcos over the long time. What is good, what is bad, what is unchanged. And I think there's actually quite a nuanced pattern. And so one of the things, for example, we're seeing in the short term, I say on the regulatory side of things, is that actually a lot of governments are being a lot more pragmatic at the moment, either national or transnational in the EU. They're in some cases awarding spectrum early. Some cases it's spectrum auctions delayed, but there's been some that have been early awards of new bands, could be temporary. You're seeing more acceptance of M&A, particularly in advance of the likely impact from an economic point of view and cash flow on some carriers in some countries. And I think that the telecoms industry has built up quite a lot of, if you like, positive capital with governments that I think may mean that they're faced with a slightly looser regulatory environment in the medium to longer term. Clearly, the area which is, we discussed before, perhaps most impacted at the moment is 5G, and that's going to be quite variable by country. So some, like China, appear to be accelerating. My perception is that most places in Europe will be probably slightly slower on 5G, not least because on the consumer side, there's going to be less appetite for replacing smartphones anytime soon for people, particularly as the economy bites towards the end of the year. And I think that the economic effects are perhaps the overriding picture here. And I know there was something that the Bank of England put out today saying that they were expecting a sharp V-shaped recovery. I suspect it may actually look like a W. I think there's going to be a bounce back in the immediate term in a lot of areas where pent-up consumer spending, people who've been wanting to buy themselves a pair of shoes or get a haircut or whatever, go out and spend immediately after lockdown in their country ends, and there's a certain amount of summer effect in the Northern Hemisphere as well. But I think that a lot of the damage is still working its way through the system. And so, whether that's retailers who have been delinquent in rental payments on properties, when that then translates to property companies having problems with their mortgages and banks having problems with bad debts, that type of stuff doesn't happen overnight. And I think that there's quite a lot of issues around unemployment as furlough schemes end, which will take several months to really come to fruition. So I have a suspicion that there's going to be a bit of a downturn, depending where you are in the world, Q3, Q4, Q1. And I think that's when the telecoms industry is also going to take a bit of a hit when retailers go bust and aren't paying for branch networks, whether it's consumers pushing back down to a lower tier on some services, or if they've got multiple SIMs, perhaps cancelling one of them. And I think that will take a little bit of time to recover for, and I'm not sure that either that's priced in either in terms of our expectations or in terms of some of the valuations as well.
Now, Dean, can I just interrupt you a little bit there, because I know when we were preparing, we had some interesting discussion with Rainer about what he's seeing on the ground in Sri Lanka. So I wonder, Rainer, if you can give us a little bit of a flavor of what you're seeing from your enterprise customers in terms of their recovery, and what you think that their demand for different types of services, whether that's IoT or other enterprise services that you're offering them, is likely to change or evolve.
Yeah. Thank you, Amy. I think I definitely agree with Dean in the sense that we might not see the full impact percolating through the systems at this time. In the time of the post-lockdown situations, I think there's definitely kind of a surge in spend, which short-term looks positive. Clearly, we need to make a difference between the consumer and the enterprise market. I would be less concerned on the consumer side at this point. As we know, looking at the average spend for telco and entertainment in terms of the income, we are talking about 2%, 3%, 4% maximum in terms of what people are spending for those services, and the compromise on this will be quite less, I think. On the enterprise side, however, clearly it depends. It depends obviously very much on the segment. If we are looking at segments which are dependent on import or export, earlier the import was the problem. Now the export, I think, is the problem. If we look at apparel, which is for our region, be it in Pakistan, be it in any of the regions here, a significant industry. If we look at other kind of export-oriented industries, if you look at tourism, where the opposite is true in terms of having all these restrictions and even quarantine situations, if at all you can travel, there's clearly a contraction because you have to focus on domestic travel only. Those industries do have definitely an impact which percolates through to the spend they would be able to cover, and even there's lesser need for example, bandwidth. We have seen even seen requests from enterprise customers coming in. Can we shift traffic provisioning to from the head office to the users at home? And we are doing this, so we actually see a reprovisioning of the traffic, and that shows up in the traffic pattern in the end of the day as well in terms of geography. So we are seeing a shift of traffic and we see less need. On the other side, I would say, and last point, maybe there is a to the point that I think Andrew made earlier of accelerated digitization, there is an opportunity to look at short-term payback digitization projects. So we do see that there is an increasing demand for cloud services. There's an increasing demand for pay as you grow rather than large investments upfront kind of projects. And we are certainly helping our customers to realize those benefits. So I think there's overall kind of a more sense for ROI. That is true for the industry in terms of telco. That is true for our customers. So we want to see a shorter term payback, but there is opportunity to leverage telco and IT services for a shorter term ROI. And that, I think, is the focus area where we should look predominantly now for us and for our customers.
Yeah, I think that's I absolutely see something equivalent around the world, and I think one of the imperatives for the telecoms industry is to think very carefully about timing and sequencing of everything. And so I think that absolutely there's going to be certain industry sectors that will push for cloud adoption much faster, whether it's things like SD-WAN, and the technologies that go with that. But I think there is a risk that some in the industry will say that's a reason to say, right, deploy, or we'll try and sell 5G industrial automation tomorrow, when frankly it's not ready. And I think that the telecoms industry has to think about what is doable now with existing products. People are not going to want to experiment. They might want to deploy cloud, but they're not going to have a new way of doing their IT with a new and unproven technology and no one skilled to do it. And so I think that, for example, I'm seeing a lot of interest in private networks for enterprises, but that's going to be mostly for 4G use cases. And I think that doing that to start with and then evolving to 5G as the standards catch up, skills, the commercial equipment, and so on. And so I think, that's important. And on the consumer side, I also see some timing issues. One thing I would say that things are happening very fast with behavior and consumer space, whether that's around going back to work or in terms of entertainment and so on. And so I would definitely recommend there's a certain amount of trend spotting that needs to be done. For example, minor things like streaming of live music concerts or festivals. We wouldn't really have thought about that, but there's been a couple of examples recently where bands who obviously aren't allowed to perform at live venues have performed online or even in a virtual world and have had more paying customers than they would have been able to get in the original concert venue for that performance. And so I think some form of sort of keeping your eye on the ball, knowing that people are watching streamed DJ sets on Twitch as well as YouTube or whatever is going on. I think that's an important part of this.
Thanks, Dean. Now I'm going to give you guys one more question to the panel in this section before we move on to the final section of our webinar. So I have a question, a couple of different guises from the audience, where they're saying on how do you see the telco's relationship with regulators and policy makers develop? Do you think that it's more likely that they're going to be seen as, a potential tax revenue driver during hard times? And I know that that's, I used to cover the Middle East and Africa, and that was a big issue over there. Or are they more likely to be seen as a partner in building out infrastructure in a post-COVID world? And the subsection to that question is, do you see some public-private partnerships emerging, or how do you think that the regulators or governments will engage telcos in that post-COVID reconstruction? So maybe start with you, Rainer, and then if the others have something to add, great.
Yeah, so I clearly think this depends very much on regulation. Is a very local situation. I can speak for this part of the world. I see definitely a very collaborative situation at this point. I see that the recognition of the telco industry to make sure that private as well as business lives are supported is recognized. And I see that, for example, those plans that I was mentioning, a support for the workforce to work from home, a support of the students to study from home, and a support for customers to use even entertainment services as a flat rate. These have been very much facilitated and supported by the regulator. So it is obviously then it requires a sense of the production. I mean, you have to make sure that your production cost is accordingly. I mean, those levels of data price need to be supported by a profitable business in the long run. Otherwise, you'll not be able to maintain. But so I do see there's a very forthcoming situation. I see other regions where the regulator has even opened up a spectrum if there's a spectrum scarcity and there might have been a bit of a slow situation to release because of whatever administrative hurdles, I've seen an acceleration of spectrum being offered, even if it's on a temporary basis, so that the operators could support and have ample capacity, rather than having to spend 3, 6, or 9 months for infrastructure capacity upgrades. It's of course much faster if you can just get a spectrum and use an existing footprint for the upgrades. So overall, I would say there's a positive, but again, it has to be done in a collaborative way so that each other side understands the production cost. We have to make sure that this whole thing is sustainable. That's, I think, very important, and I think pretty much everyone understands. So yeah, positive outlook, I would say.
I'd like to
Any
pick
quick
up a little
comments?
bit on that.
Yep.
Yeah, I'd like to. I think what Arona says is completely right. It's very local, and it's not just local; it's personal. You're talking about individuals and people and ministers and government and regulators and so on. So it's kind of hard to make an overall call. But my view on it is that over the last maybe 20 years, a lot of regulatory and government relationships have become very adversarial in markets that we see, and there's an opportunity to change that to a collaborative relationship, and that requires behavior and intent, and I think it needs to be led by the telcos. I think telcos have done a great job through, from what I've seen, most of them throughout COVID, and I think there's a possibility to build a different relationship there. I think that's a fantastic opportunity, and that's really, really important. And what does that mean? It means being open, it means being collaborative, it means being able to share information. One of my themes at the moment, as you know too well, Amy, is about telcos involving stakeholders. Quite often telcos think about their strategy as a telco only strategy, and now's a great time to be rethinking that. Going back to what I was saying before about rethinking about how the government thinks, how the regulator thinks, involving them in the conversation, not telling them what you want or to put the prices down or whatever. I think there's engagement to be done there. So that's what I would advocate, but I'm going to shut up because I know we have more to cover.
Thank you very much.
I just have a quick thing, which is I think it's not just the relationship with regulators that's going to change, but the other bits of government. So I think it's people who are doing planning, local or central government levels. I think planning rules will be reduced. It's going to be the Department of Education, the Department of Communities, the Finance Ministry, who's looking at sort of infrastructure investment. And I think one of the interesting challenges for operators is to go outside of the telecoms ministry and look at all of those other, well, as Andrew says, stakeholders around the cabinet table.
Thank you, Dean. Now we're going to move on to the last part of our session, and hopefully we'll pick up any other questions after that. But without further ado, I hand over to Matt.
Well, thank you, Amy. So what I'd like to do is just to introduce a little bit some of the current research we're doing onto the dynamics in the digital health market. So we discussed earlier on the SWOT slide really that there are key opportunities around accelerated digitization, developing propositions for customers with accelerated needs, and also engaging more deeply with key stakeholders, particularly the government. We've just been talking about regulators a lot. And what we're really seeing in healthcare and digital health in particular ticks all these boxes. So we think it's a really interesting market to look at. And it's also one we've highlighted more generally in our previous research and also in our consulting work. So just in terms of giving background, well, COVID has of course put our traditional healthcare system under intense pressure. That's no secret. On the one hand, to meet the demands of the pandemic itself, but also still to provide regular emergency and urgent care. What it has, however, done is also led to a surge in demand for telehealth solutions. And by that, we really mean digital health solutions, trying to deliver things like virtual consultations at a distance, which has obviously been crucial under social distancing. And I think crucially, this has also been enabled by temporary changes to regulations, which have really been trying to encourage and also just generally to allow it. And an example here is in the US, Medicare is now reimbursing healthcare providers for virtual consultations at the same rate as they would for an in-person consultation. And this is something I'll cover off in a little bit more detail later. So there's lots of interesting dynamics, and there's been really explosive growth in telehealth. Just to give you some numbers here, in March and April, we've seen a lot of telehealth providers state over 1,000% year-on-year growth, and this, I guess, reflects both a very high demand now and potentially a smaller demand a year ago. In the USA, a really impressive statistic is that across the USA in March 2020, they saw a 4,300% year-on-year increase in claims related to telehealth. If you just look at the stock market, so what are investors thinking about this? Well, if you look at key telehealth stocks, many of them have increased by 200 or 300% over the last quarter. So some really exciting numbers coming out of telehealth. And this has obviously led to a resurgence of interest in these digital health solutions among telecoms operators and other kind of non-traditional or non-specialist market participants, like insurers, for example. STL has also been talking for a long time about how healthcare is an attractive market for telcos. Obviously, there's always going to be needs in healthcare. We also think those needs are going to change and potentially increase in the long term, particularly around the aging populations we're seeing in the West. And also healthcare does have a low level of digitization in the normal world, so there are opportunities there. Telcos also have quite a lot to bring to the table to the market. Just one example is that healthcare is traditionally, limited by countries' borders. It's a national thing. And telcos are large, trusted national players, so they can bring their brand and potentially their sovereignty as well around sovereign data to the proposition. So I guess there's lots of exciting things happening in digital health, but then the question here is, well, how real is this, and is this going to last? And this is the research. Our research is hopefully going to answer these questions. So firstly, how will COVID-19 change the size and the nature of the opportunity in digital health? To what extent? How quickly? And really in which segments? So are we going to see a constant trending upwards, or are we potentially going to see waves? One interesting thing here is that because people with non-urgent care needs have been delaying it, even when the COVID-19 pandemic finally subsides, we think we're likely to see a second wave of demand, kind of a demand surge within the healthcare system, with all these patients who have delayed seeking care until social distancing guidelines were relaxed. Also, another question is, well, will telehealth continue to lead, or will other areas become more significant too? For example, remote monitoring. So we're kicking off a program of research, really looking to answer these questions both qualitatively and quantitatively. We're looking at this globally, sort of in an overall sense. We're looking at some key markets. The markets we're currently looking at are the US, Canada, the UK, Germany, India, and China. China's a really interesting one. And we're also looking at this by service area and by kind of layer in the stack. In terms of what our hypothesis is right now, well, we do think COVID will represent a sizable boost for the digital health market beyond the short term. But this will vary considerably between markets, because healthcare is a very idiosyncratic thing between countries. We can't generalize lessons from the US to the UK because their healthcare systems are so different. So I'm just going to take you through a few things we're considering in terms of our analysis, in terms of reasons on the left, those in green, which are reasons to be optimistic. There are reasons on the right where maybe things might not change as quickly as we've been saying. Firstly, digital health was already growing very quickly before the pandemic. Q1 of 2020 saw record funding for digital health, $3.1 billion in M&A. And those decisions will have been made before the lockdowns really took force in the West, before we really knew it was going to be a big issue. Deals obviously take time to sign as well. So we were seeing kind of organic growth accelerating before the pandemic. So that's one reason to be optimistic. Another more specific data point here is that a top telemedicine platform in China, which we can't name unfortunately, has actually seen accelerating growth in terms of total users and usage, even after lockdowns have mostly been eased in China. So I think that's really encouraging. And I think the question is, well, is that cautiousness from consumers, or is that really a concrete change in behavior? China is a really interesting market, and that's why it's one of the ones we're going to be looking at. Because it's such a digital market, you know, young and older people that are really kind of digital natives almost. And also another interesting thing about China is that patients do pay a lot out of pocket for healthcare beyond the social insurance the government provides. So those are idiosyncrasies to the market. But again, encouraging from China that we're still seeing telemedicine uptake accelerate, not just maintain its current trajectory, even after lockdowns have been eased. So that's another reason to be optimistic. I think a really significant point, this reflects a lot of discussions we've been having, is that the pandemic has really demonstrated the value of digital health and telehealth in particular to regulators. The question here is, well, will regulators be more open to kind of supporting telehealth long term? And if you look at what the regulators are saying, they're kind of saying, well, we're trying to learn about telehealth and also remote monitoring at the moment, and then we're going to come up with a longer term strategy in the future. But regulators have been really significant in terms of driving this growth in telehealth. If we look at the US, for example, a senior policymaker commented that it's given them 10 years of learning in only 3 months, which I certainly think for a lot of us, the last 3 months has felt like 10 years. And they've had 30 temporary changes to the law implemented. Things around reimbursement for Medicare, like I mentioned earlier, removing geographical restrictions. So people from urban areas and people between states can also get reimbursed for telehealth consultations. Prescriptions can now sometimes be prescribed in a telehealth consultation, thanks to a change in the DEA, and also easing privacy requirements. Telehealth providers can also now do some things over things like Skype and FaceTime. So that's a really significant one and reason to be optimistic. There's a lot of lobbying going on in a lot of markets to try and keep these temporary changes to the law permanent. There's also a patient backlog that I talked about earlier. Sorry.
Now, Matt, I'm just going to interrupt you because we are very close to the end of our session. We have 2 minutes left, so I apologize for cutting you off. And I'm just going to pose a final question to the panel and get everyone to give your perspective. And Matt, you can give your healthcare perspective. So it's a question, a very brief answer since we have 2 minutes. So I have a question that says, do you see any changes in customers' expectations on their overall experience in the post-COVID world? Who wants to go first?
I think Rainer should go first because he's actually dealing with customers. We can guess, but Rainer can say what he thinks.
Yeah, there will be, I think there will be a new norm in every part of the world now more than ever before in terms of expecting the digital infrastructure to work. There will be an expectation to be affordable. This is obviously very important for regions where people are not earning a lot of money and where you have day wage workers who really have maybe a spend of $2 per month that they can afford, and still the customers need a decent connectivity for voice and data. So we will see, I think, differentiated offerings to cater to everyone in the market at the same time. you will have very sophisticated knowledge workers that will require like a 10-hour per day video conferencing line to be uninterrupted at a high quality, and we also need to cater to those types of needs. So I think there is a differentiated need in the market from like the low wage to the more sophisticated user on the same infrastructure, and that's why we have to have a differentiated way of serving the customer at a low cost, but still at the differentiated quality of service, which relates to my earlier point of having a network provisioning and a kind of traffic management which really allows low production cost at high quality.
Great, thank you. One more comment before we close out. Anybody else?
I'd just like to say thank you to Rainer. I don't know there's much we can add to that. More for less, high expectations. But maybe the deal is a different engagement, a different engagement in the society that they run. I'd like to thank Rainer for joining us from Sri Lanka, and also to Matt for joining us from China, where we've sent him to investigate the furthest reaches of coronavirus behavior in healthcare. Great. So thank you, and thank you all for joining us.
Thank you everyone for joining us. I know we've had a few healthcare questions. We'll follow up with all of those after the session. So thank you all for listening and for joining.
Thank you.
Bye. Bye.
Thank you.
Thank you, everyone.